Hello guys, good morning. Welcome to the 3D market commentary for today. Today is Monday, January the 10th, 2022. Hopefully you guys had a good weekend and looking forward to another trading week ahead. Here are the disclaimers in the top left-hand corner. Please read them. You don't have to, or I won't read them to you, so you don't have to read them as I speak. You can pause the video if you'd like to in order to read them. My name is Becky. My email address is just here, becky@tradictive.com. My colleagues can also help you on support@tradictive.com. So those are places you can go to email us if you have questions. There's also another place you can go, which is tradewithufos.com/Becky. And from this link, you can get different apps and platforms, some of which are free. You can book one-on-one coaching if you think that would be helpful. And you can come down here, you can log in for free, and you can ask questions in this place. By doing that here, you are asking questions in a place where other people can see the questions and they can see the answers, and so we can all learn from this environment together. So ideally, that's where you'd come for questions. Now, coming back to the 3D market commentary, of course, what we are covering, for those that might not know actually, is we send out an email every day, Monday to Friday, that has information on major world markets, looking at 3 separate elements. That's why we call it a 3D market commentary. We then do this video for 15-20 minutes just to give you a little bit more context to it and explain it in a little bit more depth. So let's bring that up. Let's bring up that, if I've got it, I thought I had, here it is, there it is. On the left hand side, that's the email that we send out, and of course the data is relevant to market data, which is what we have on the right hand side. So just to quickly explain what those 3 elements are that we look at. The first thing is market climate, meaning where are the probabilities? Where is the market likely to go? Is it likely to go up? Is it likely to go down? Or isn't it really likely to go either direction? In which case we have a better idea of, do we buy, do we sell, or do we do nothing? Now, in everything we do, we use technology to help us. It's no different here. This is AutoClimate. This is the app that we use to help us figure out where the probabilities lie. Ignore the lines, but if we focus on the dots, this is how AutoClimate works. If we have a thick red dot, like we do in this example, that would tell us that currently we have probability to the downside. If we see a thick blue dot, that would tell us probabilities to the upside. And if we see a thin dot of either colour, that tells us not enough probability either way. So is it thick red, is it thick blue, or is it thin? That gives us an idea of whether or not the probabilities are up, down, or nowhere. Okay, so next thing we'd look at are buy and sell UFOs. Buy and sell UFOs. Essentially what this means is, where are buyers and sellers? UFO stands for unfilled orders. Essentially, we're looking for buy orders and sell orders. Lots of them. Why? Because lots of buyers are likely to push price up. Lots of sellers are likely to push price down. So where do we find big stacks of buyers and sellers that could push price up or down? Again, we use an app to help us called AutoUFOs. These little green ones that show here on the chart, those show us where the buyers are. Gives us the prices as well, the range where we see buyers. We have sellers, and these are these red UFOs. Again, tells us the prices on the right hand side. Gives us an idea of price, where price might fall from. Now in this example, we can see we've got these buyers down here. You can see the lines as well. Price came into these buyers and was pushed up, came back into these buyers and was pushed up. That's why we want to know where the buyers are, because they push price up. So it gives us an idea of where we might be buying from as well. These sell orders have already worked. They're very recent, but price has come back in and it's starting to react and be pushed back down again. Again, that's why we want to know where sellers are, because they push price down. So the last thing we then look at is market volatility, how quickly we expect markets to move. So we'll look at that per market, starting with the S&P 500, which is the top 500 US stocks. And everything we're looking at here is relevant to a daily time frame. Okay, different things happen on different time frames. This is relevant to a daily chart. So with our market climate for the S&P 500, top 500 US stocks, we have a confirmed downwards climate, meaning thick red dot, probability downwards. Now we have sellers just above us there at 47 15.75 to 46.62. And we've got quite a distance between current price and the next stack of buyers that are 44.79.75 to 44.36.25. That's where we find our closest buyers. So overall, probability to the downside there with the S&P. In terms of volatility, we would expect that the S&P would move up or down within 1 year of 19.62%, either up or down. So in a day, that's up or down of 57.72 points. In a week, it's 127.07 points. And in a month, 264.51 points. So that's the S&P 500 and what we can expect there. So moving on to the next market, which is crude oil. As I load it, just to point your attention to the different courses we have up here and the apps down here as well. We do a variety of courses in futures, stocks, forex, backtesting, trading plans and psychology. Most of those courses come with a 3-month complimentary access to the apps. Now, AutoClimate down here is a free app on most platforms. You can get it on anyway. AutoUFOs, where we see the buyers and sellers, that's a paid for subscription model. It's a monthly payment to access the AutoUFOs. You can subscribe directly to the AutoUFOs. You don't have to do a course, you can just subscribe directly to them. However, most of the time, doing a course and getting 3 months for free on the AutoUFOs is actually cheaper than just getting the UFOs for 3 months. So check that out and see what works best for you. So coming back to crude oil, I'm just going to move the chart a bit here, squidge it a bit so we can see what we're looking at. We have a confirmed upwards climate, thick blue dot, probability upwards. Now, something to be aware of, we are nearly twice as far to the upside than what is normal, meaning we've been going further to the upside than we usually would do. Usually this market would go up for 7 candles in a row, and we've been going up for 13. So we've gone past what would be normal, so we are overextended. We also have sellers here that are already pushing price down. They are between 82.33 to 79.3. But we also have buyers underneath us pushing price up. So we have 78.58 to 74.27 are buyers pushing up. So what we have, the climate is pushing up, the buyers are pushing up. We have sellers pushing down and we're overextended, so that's less likely to go up. So what we're having here are buyers and sellers pushing against each other at almost exactly at current price. So I would say keep out of that. We don't want to be getting involved in a fight. Whoever will win, let them, and then we can jump on that. No point getting in the middle of it. It's more of a gamble to just pick a side than it would be to get involved if you have clear probabilities to one side or the other. So overall, not enough probability either way, I'd say, with crude oil. In terms of volatility, we'd expect to move in a year up or down by 37%. So in a day, 1.84 points, in a week, 4.05 points, and in a month, 8.43 points. Again, either up or down, these movements. Okay, the next market is gold. Let's load gold. As I load it, again, just to point you down here to our coaching and support. We do offer a lot of coaching and support for free, so you can join us on YouTube and Facebook and LinkedIn for our free streams. There is also a closed coaching community that we offer. And in that community, people get access to more of our time in a closed environment. So check that out if you think that would be helpful to you. But like I said, we do a lot for free anyway. So gold, we have a thick red dot, probability downwards. Now, we have buyers underneath us here that have already worked to push price up a little bit. They are between 1781.3 to 1753. We have sellers above us there at 1830.7 to 1808.2. So overall what we have is probability to the downside coming from the climate. So we've got probability down and we're kind of in the middle between buyers and sellers. So overall probability to the downside, if we were to hit these buyers again, we would expect price to go up from there. If we were to come up and hit these sellers, we'd expect price to go down from there. At the moment, not close to either stack of buyers or sellers to change things. So probability down is coming from the climate. In terms of volatility with gold, we'd expect in a year movement up or down of 15.04%. So in a day, 17.04 points, in a week, 37.51 points, and in a month, 78.09 points, up or down. So that's gold. Next market is the US dollar. Now, as I load this, just to remind you that everything we're talking about here is probabilities and statistics, but definitely not guarantees. Nothing is guaranteed in life, let alone the markets. We need to make sure that whatever we're doing when we're trading, that we are adding in as many probabilities as we can and managing our risk. So even though something is probable, does not mean it's definite. So bear that in mind. So with the US dollar at the moment, we have a thick red dot, probability down. Not surprising, as we've just had a new stack of sellers, which we're within at the moment, between 96.33 and 95.885. So we have sellers at the moment pushing down. We have the climate pushing down, so probability downwards. If we were to come down here and hit this stack of buyers, again, already pushed price up once and twice there. So if we were to come down and hit these buyers, we'd expect them to push price back up, but we've got a little room there for that to happen. Oh, I don't know what's happening here with my, there we are, cool. Our buyers are here, they are between 95.595 to 94.965. So overall, probability to the downside at the moment with the US dollar. In terms of volatility, we'd expect movement up or down in 1 year by 5.33%. So in a day, 0.32 points, in a week, 0.71 points, and in a month, 1.48 points. That's the US dollar. Now the next market, the final market, is backed Bitcoin. So let me just load this one. Now with backed Bitcoin, we have a thick red dot, probability down, a confirmed downwards climate. So probability down. We're kind of in the middle between buyers and sellers. We've got sellers up here between 47,610 to 45,705. And we've got buyers down here between 30,820 to 31,615. We're kind of in the middle. So at the moment, far enough away from either stack of buyers or sellers for them to have an impact today, in which case it is the climate that is pushing Bitcoin down. So probability down with Bitcoin at the moment. In terms of volatility, we would expect a yearly movement or a movement within a year of 72.17%. So in a day, that's 1,902.16 points. In a week is 4,187.42 points. And in a month, 8,716.81 points. So that's Bitcoin. So we've now gone through each of our 5 markets that we look at on our 3D market commentary. We have looked for each of them at the market climate, using AutoClimate as an app to help us, figuring out if we had probability up, down or nowhere, looking at the thickness and the colours of the dots on AutoClimate to help us with that. We then looked at where big stacks of buyers and sellers are. Buyers that could push price up, sellers that could push price down, understanding where they are on a chart to help us figure out where we might buy or sell more specifically. And then we've looked at market volatility, meaning how quickly we expect the markets to move. The last thing to look at here, if I scroll down, is our weekly economic calendar. Looks like there's not that much going on this week compared to a lot of weeks. We get this from fxstreet.com and we filter by high impact news. So what that means is we are looking for which scheduled news reports are coming out that could impact these markets quite heavily, meaning increase their volatility. Increased volatility for a trader means increased risk, can also mean increased reward, but either way, we want to know about it as traders to help inform our decisions. So today being Monday, we have some news coming out in the evening time, US time, on Australian markets. So if you trade Australian markets or the Australian dollar, be aware of that today. Okay, so that's it in terms of our news flash, our 3D market commentary. If you have any questions, please go to tradewithufos.com/Becky, log in here for free and post your questions here so that I can answer them here and we can all learn from this area together. From here, you can also book one-on-one coaching if you'd like, and you can get different apps and platforms as well, some of which are free to help you out with your trading. I'll be back on Thursday for the next market commentary. My colleague Boyan will be taking it tomorrow and Wednesday, and we have other sessions throughout the week as well. So join us on those, and I will see you next time.